Okay, so let's take a look here at the Nasdaq 100 futures. What I can see as far as the picture that's being painted right now is that we are in a wedge. Okay, should be able to see this to where looking at the my higher base charts I used on a 120 range chart, the market it broke structure to the downside, but then these areas in between on this leg to the downside, these are minor areas of structure where the market is breaking back to the upside here. And then this is a low here. So this is a major area structure. There's a major area up here. So we're in between this high and this low here. And the market is kind of just chopping, moving sideways. So be very careful when we're trading or in a wedge here, because particularly what you want to do is see the market break kind of out of this zone or this area, either to the downside or to the upside. If it's going to push lower, then it's going to have to break below this area here at 591 or 592 to make a pretty much a new low right here. Now this is the most recent low right here that it created on this move to the downside. So everything in between pretty much would be where I like to consider minor areas of structure until it breaks this major area right here. So we'll have to wait to see what it's going to do, or if it's going to come up here and break this area here. Now there is a supply area resting up here, and there are some small areas or smaller areas of say demand. In particular, like there's an area down here. This would be a nice area. The market didn't tap into it because it started breaking structure back to the upside, but then it started breaking to the downside, taking out this low here, this area here, and as it moved lower, and then it kind of turned back around. So this is what I'm saying. We're moving sideways right now in between this high and this low right here. And you got to be able to see this visually. So it's either going to break lower or break this high up here. So right now we're just kind of chopping to the downside. For all those that may be asking, what possibly maybe be some areas to look for, interest, maybe right here. This was this is a demand area here. It is a demand area. It's aggressive buying to the upside here. But again, you have to pay close attention because right below there's another area right here. So this right here, this area down here, makes the most logical sense, but this area could also be a reaction point as well, for all those that maybe pull a fib to see from this low to this high right here. We're back below the 50%, approaching the 61.8%. It could react right here, could reject, but that's where we move down to the lower base chart to look for a more precise entry point off the 24 range. This is an area definitely for sure here, because this is where it started breaking back to the upside as it broke through this area structure. Again, you got to be careful because we are trading within this swing right here that it has not finalized by breaking this low yet right here to the downside. So don't know what it's going to do, if it's going to break this low or if it's going to continue pushing higher, taking out some of these smaller areas and then break this high. So you just kind of got to think logical in terms of what's going on. But just be very careful in this area because of the market moving sideways. Okay, right now the market this is an area of support, and where it's at now that it's kind of reacting off of below this high volume area. So yeah, it could react and bounce at this area of support. But again, we're looking at areas of supply and demand. This being a demand area here, aggressive buying down here, and as well, like I mentioned, it could come down here. So when it gets to a zone, we're looking for the rejection. Okay, so this is a rejection point area here that I was interested in looking at to see. Okay, all right, I'm looking to run the market probably back up. Let's see what happens here around this up. Okay, they only filled me one contract there, so let's see if it comes back and accepts my second contract. Gotta be careful here because this is an area. This is where I'm looking to take out at, right up around here. Okay, all right, got out that trade there real quick, because this right here, it broke through this small area of structure right here to the downside when it made this move pushing lower. So we gotta be careful when you see things like that. You have this demand zone resting right here, but also there is a supply area that where the market pushed lower here and broke through this area of structure, the swing right here. So quick scalp there on the downside as the market moved down. and took a quick buy entry going long, just back up to this area right here. I entered with 2 contracts, only one got filled, both of them were limit orders. So this is why I went back to my 120 range. I was looking at my 24 range chart, and what I noticed here was that, okay, I drew up the 120 range, demand zone there, and then identified a untested, unmitigated area where there's a gap back at the demand zone, the 24 range. So a zone within a zone pretty much. And then, I'm aiming for the market to, in this case here, to push back up to at least this area here at first, because of the fact is this is a supply area because the market broke structure right here. So you have to understand that we got a breaker structure below 19,705 with this small little swing to the downside right here. So let me take a look here. There's a supply area here, but be careful because there's one up here as well. So remember what I talked about when we're looking at legs or moves to the downside as the market's breaking structure. This was a move to the downside so far. It may not be finished out, but it could be. But this right here would only be back up to around the less than the 50% area. So I'd be more so interested in this zone up here around the 76.4%, because the market on the move to the downside, it broke below this area structure, as you can see right here at 19,715. Okay, so just one quick little scalp long today, just back up to this area, and as you can see, it's already rejecting that area. Why? Because it's a small little area of supply where that aided in this structural or this breaker structure to the downside when the market moved lower. So we got a break here of structure and a breaker structure right here as well. So now we have to wait it out. So let's see what does happen if it gets back up to this area here at 763. I'm not gonna take a trade there, to be honest with you. I would be more interested up here, and I'm gonna mark this area because this would be my zone of interest if we do get back here. But again, that long that I took, higher time frame, 120 range demand zone, and smaller time frame, 24 range demand zone right there, and it's pushing higher right now. It could break through this area, and this is what I was talking about. If you have runners, then you can allow a runner to, say you enter multiple contracts, take most of your position off, let one contract or the last contract run to see how far to go, pulls back maybe to break even, then go ahead and close it out, so that way you're not taking on any drawdown or any loss, especially when you're in profit already. So let's see. So that was a 15-point pickup right there on that trade there. And again, this was also a a round number at 19,700. So that gave me confluence there. So we got a higher time frame, 120 range demand zone, and then on the lower time base chart or lower base chart, I should say time frame, but lower base chart, the 24 range. I trade range charts. We had that demand zone as well, but it's also in confluence with that round number of 19,700. Now we're pushing deeper into the zone, and I'm not sure if we have news right now, so let me take a look because the market is kind of volatile. Let's see. Do we have any news today? I probably had some this morning, 8:30. Yeah. Nothing else for today. It is a bank holiday in London. Okay, so yeah, outside of that, no news. Okay, so yeah, now it's pushing lower. So there's a demand zone resting down here. So now this one is invalid, this zone right here. So let's take this box here, let's place it down here, and we'll see what happens if the market gets to this zone here. Now what I'm gonna do is go ahead over to my 24 range chart. I'm just gonna mark up this area as we speak now. But let me do this because I'm gonna take this off now. Okay, let's put this on all charts, and let's go over to the 24 range and see what we got down here at the bottom. Seeing if we have, okay, it's a beautiful area right here. All right, a beautiful area of demand resting right here, but there's also one down here at the bottom. So which one? I'd be interested more so in this one right here, because it's the latter portion of this move to the upside here, where there's still which left a gap at. It could also reject this area here. So both of them are within the zone. So we'll have to see which one what takes place when the market gets down to either one of these zones here. So this one here, it's inside the 120 range chart, and this is on the 24 range chart. So I'm marking up both of these zones right here. Okay, and we'll see what happens. If it gets down there, we'll see what happens. Let's draw it out some. So the bigger box is the 120 range zone, and the smaller boxes are off the 24 range. I'll blow it up for you a little bit so you can see the 24 range. Demand zone there and demand right here. Both of these are have a gap at it. Okay, that means it's untested, unmitigated. Now this has taken some time for it to get back to it, so we have to wait and see, you know, in terms of how the market's going to react if it taps into it, and we are moving lower. So yeah, let's see what happens. So all right, okay. So the market is moving kind of swiftly to the downside. So remember I said that we are in a wedge here. We got this high here, this low here. It may want to come down here and break this area structure right here, or this low here at 540, 19,540, and then we get a major structure break low to the downside or break to the downside. This is a demand area, okay, where it broke structure moving back higher. Okay, so let's see what takes place here once it gets to it. If it taps into it, what is it going to do? Is it going to break through it? It broke through this zone now after reacting at it. Okay, so I picked up a quick 15 points right there, and I'm going to wait to see what happens down here. This is the latter portion of this move back to the upside that broke this area structure above this 19,008 819 area. Now the question is, what is the market going to end up doing for the rest of the day, or pretty much you can see since the let's see here, after London into the pre-market hours up until the opening of the New York session, we've been bearish. I mean, we started breaking structure back to the downside, moving lower. Let's see here, as you can see, making low, lower, high, lower, low, breaking this area here, breaking this area here. So we're bearish as it stands right now. As far as movement to the downside, we are in a wedge still, so be very careful here as far as what's taking place here. So, but right now, since the open of the market, yes, we've been bearish, moving to the downside. But there is a key area of demand below us right here, in which the market can react to. But let's just have to wait it out and really call it or see it for what it is when it gets there. All right, we're in the 120 range zone there. It could break through this area. We haven't really tapped into these zones yet below us. Down here, which I talked about. This is the 24 range. We are in the higher time frame or higher base zone. That bigger box right there, as you can see. But not sure what it's going to do here. At this point, so I'm just waiting patient. That's the big part about waiting. Trading is waiting patient to see how it's gonna react at the zone. It could push up. It could react. It hasn't hit one of my zones of interest on the smaller or base chart. Okay, right here, the 24 range. It is reacting or rejecting right now. So as it stands right now, I'm just gonna wait it out to see if it is gonna tap one of those zones, the smaller boxes right here, first. All right, it's tapping my zone there, the first zone. Okay, so I'm going to see what we get right here. All right, I'm long. Come on. And okay. 2 contracts in. All right, it could come down. Well, it tapped the second one too. You can see it right there. So I'm in long right now, and let's see. I want to put a stop back here. Whoops. Oh gracious! Trying to put a stop in, guys. So give me a second. Yeah, that's good. That should work. Hopefully, it goes up there and hits my TP pretty quickly. Just scalping here. Come on, don't do that. All right, this is not okay. I don't want to see it really. So this is the point here. Okay, my TP's back here. Oh, there we go. Okay, we got fill. So see, pretty quickly there, rejection off the zones right there. I just showed. I put my stop right here. What I was getting ready to say was that we got the break above this area right here, right? Okay, so basically, if it comes back below and breaks back below 613, I would probably get out of my trade. That's going to put me around right, near my break-even point. Yeah, break-even point. So that way it doesn't come back and hit my full stop. I talk about that in videos. But in this case here, it's going up there. It's going to hit the TP. It already hit my TP. And I think that was another 15-point move right there. So again, we could actually definitely push up higher if we get some more rejection. Now I can come down here and test this area here, but this is a demand zone. There are some gaps that need to be filled right here to the upside, so we may want to come up there and fill some of these imbalances in. And as you can see, I got in right around this area right here and got out up near this area here. So it's like a 15-point move back to the upside right there. So yeah, again, that was off the higher base chart, marked up a demand zone, aggressive buying, breaking structure to the upside, looked over, lower base chart, my 24 entry range chart, the bigger box is that higher 120 range demand zone. And I just waited for it to come back and tap onto one of these zones here. It rejected, and it actually came through the first zone. Oh, go back. First zone right here and broke slightly below, and then tapped the second zone. Like I mentioned, it could tap the one below just as well, and then pushed up to the upside. Okay. Now, both of these were valid zones, of course, because we pushed to the upside here, and it's, if you look, I mean, it broke. It continued pushing to the upside. So this was like the most latter part of the extension of this major leg to the push to the upside here before it started retracing and came all the way back down here. So one of these smaller zones inside of the larger zone would have definitely worked. Okay. So, and as you see, it's reacting. So far it's pushed up to 19,640. Okay. And it could come back up and maybe even want to test and fill in this gap here at 45. Maybe back up here around 75. Don't know. You just have to trade what you see. No one knows exactly where the market is going to go 100%. Of course, you can look at areas of support and resistance to get a, understanding of where it could want to maybe reject that. In this area here, right here, this is an area of resistance where you see it bouncing at right now in the 24 range. Why? All these wicks right here. This is resistance. Okay. If it breaks through that, then it may come up and probably test some higher area. Okay, maybe up here. This is resistance as well. This is above a high volume area. There's resistance here. It could react here and push back lower. Okay, just as like right here, it reacted when it got up to this small area of resistance right here and broke down a little bit. So it broke down from 639 back down to 639 points right there above this high volume area. If it taps and hits an area of support or resistance, in this case resistance, then it could, it could reject. But I'm trading supply and demand based on high probability setups to where there was a gap resting back at the higher base supply demand zone here on the 120 range chart. I marked that up, and then I'm moving down to a lower base chart, my 24 range entry chart, to mark up to look for smaller zones where there are gaps or unmitigated zones within the higher base zone. So hopefully that makes sense. So I wanted to do this live recording today so that within the session, you can see me take these two trade setups, or in this case here, it was two. It could have been one, but the first one I picked up 15. The second one I pretty much picked up 15. So that gave me 30 points on the Nasdaq 100 futures today. You do that times 4 ticks. That's 120 ticks on the Nasdaq today. And that's really much all I need, in trading. Now, the first entry, I didn't get in with 2 contracts. It only got me in with 1 contract. The second one, I was able to get in with 2 contracts. So I traded a total of 3 contracts today and picking up 120 ticks, which is 30 points. Okay. So hopefully that makes sense to you guys. I mean, I'm just all trading supply and demand, using logic, using common sense to see which areas make the most sense to trade from. All right. So you can do the same thing in doing this just as well. Okay, and as we can see here, just to round this up or round this off before I end the video, you can see right here the market went up. Where did it test there? 650. 650 is a half number. The market loves half and round numbers and will react at them. And as you can see, it did so. And what did it do? It pushed lower. I mean, it continued pushing lower. Looking at it now, okay, we broke through this. We broke through this major area structure right here below 540. I talked about this, or 541. I talked about this. So, you have to now look to see where there are key areas of possible areas of supply where the market could react at, right? So there are, several areas back, within, if we trace back, that the market could test. Okay, so we have a structured break right here to the downside. This is a supply area, this is a supply area, and this is a supply area, as well as back up in here. So I'd be interested more so here or here, all right? But there's also one resting back up here. So taking trades at the latter portion of a leg, we're at towards the low, it's not the opportune area. Taking it back up to where the market is, for example here, we had a low pullback, breaking structure below this area here. So this would be an interesting area. This would be an interesting area. Then when we get back over here, we can see, okay, the market broke lower, broke structure right here. This would be, oh, actually, no, not this area here, because this is actually, it's mitigated already, meaning it's already been tested. So just forget about that area there, that zone there. So primarily this one here and this one here. I'm not saying that it can't react at this area or this area. It could definitely do so, but based on probability and logic, I like to take my trades back at where the move started happening at, more so the upper end or upper portion where the market was moving lower before it broke an area structure. That's what I'm looking at. So I just wanted to sum that up. But overall today, those two trades there on the Nasdaq, that was like $900. The first contract, the first trade was like $300. Only got in with one contract instead of two. Second trade like $600 minus commission, so we're talking like $12, $13, whatever the case is. So all in all, at the end of the day, ended up with $800 and some dollars, or whatever the case is. I did take a trade on gold earlier. Still trying to test that market out. So I haven't really been discussing so much about the gold market or that particular futures market, but you could trade the same strategy, what I'm trying to say, regardless of the actual market. And but you just have to know the areas in which makes most sense to actually have interest in taking trades from. Okay, so I just wanted to do this video today to show you that you can look for rejection areas at key points of areas of either supply or demand. In this case here, it was demand. Don't expect just because the market reacts at an area that's going to push all the way back up or something like that. You just have to look and trade based upon what you see. And as you can see here, when the market came and tested this area, if you would have got in on the break and close of a candle, look how far it ran. The break and close would have been around about 618, and then it pushes all the way back up to 650. Again, that 20-point move I talk about, you can definitely pick up your 20 points there. Pretty easy, right? And it comes up and it's testing, these areas. You have a gap right here. Okay, there's an imbalance resting right here. There's one here, as well as back up here. But it feel that imbalance, or that a lot of people, that's fair value gap, whatever you want to call it. It tapped that area and then it pushed lower, but it was also pulling back and tapped into a 19,650 area just as well. So just because the market reacts at a zone where you have confluence of both on a higher base chart and a lower base chart, doesn't mean that it's going to push all the way back up. You trade on what you see. If the market starts folding in the opposite direction and starts reacting at the zone, and you notice it moving back in the opposite direction from what you're trading, then you may want to go ahead and get out, take your profit. Okay. So anyways, I just want to sum that up today, those two trades that I took. And I did this for a reason, because I want people to understand and see, what am I looking at? I'm an explanation of the market in reference to structure, but also in reference to location of zones itself. All right. So which zones make more sense to me based upon what the market is actually doing. So hopefully that makes sense. Outside of that, that's all I have for you today on this video here. I appreciate everyone that follows the channel, that are current subscribers to the channel. And if you're not a current subscriber, please take the time to go ahead and click on the sub button down below. Make sure to turn your post notifications on so you don't miss one of the uploads. If you want further or more in-depth detailed breakdowns, it's a private community, and there are a lot of people that have already joined and are part of that community and are doing well because they spent time watching those videos. It's the trade breakdown videos. That's where I really go into deep depth about trade setups, setup after setup after setup, like ones that I post over here on the Discord. Okay, so there's the Discord link down below. If you scroll down to the description portion of the video, you'll see a link that says join the Discord. Right below that is a link that says become an elite member. Okay, you guys may be thinking like, oh, it's going to be some astronomical price. No, it's only $6.99 a month. That's all it is. Okay, now again, that's going to help you in reference to show you where to place stop losses, where to place profit targets, talking about structure, what I'm looking at prior to taking a trade, and then while I'm into the trade. What is my mindset? I'm walking you through these trade setups, as well as you get the video playlist and other various video content. Like I did a great video on market structure. So, I would, if anyone that's out there is interested, is a lot of value in that $6.99. Okay. So, all you have to do is scroll down to the description portion of the video. Right below the Discord link, there's a second link that says become an elite member. Click on that. Then 2 tiers will pop up. Make sure to choose the second tier that says $6.99, and that's going to give you direct access to all the videos within the membership program. Okay. So outside of that, that's all I have today. I appreciate it. Again, everyone spending time watching the videos. If you found value in today's videos, you like videos like this, please make sure to drop a like on the video. Take care. See you in the next one.